Hello everyone, welcome to the Ichimoku charts.com and forextrading.tv daily analysis for light sweet crude oil for Tuesday, November 5th, 2013. Well, a continuation of the trend to the downside today in a candle that's made a lower high and a lower low. Previous day's trading we had an indecisive doji type candle at the end of a very long and very dynamic first and second time frame downtrend. It did set the market up for a potential change of trend, and the market found some support around the 94.63 level for the previous day's trading. And then for the doji type candle, we saw the market finding some resistance around that 94.63 level, but we were still looking for a potential higher high and higher low. And this really highlights quite well how confirmation with any of these trading signals is very, very important. So even though we have a doji candle at the end of a strong first time frame downtrend, it doesn't mean automatically that we have a change of trend. So today we're seeing that trend continue to the downside with the extent of the body becoming larger, and that suggests that the sellers have once again found some solid downside momentum. Now, that's not suggesting, however, that the trend will continue. We did have the market finding support around the 93.25 level, and between that level and the 92.67 level. And even though we had a black body, so we have a shift in momentum back to the sellers, to the downside in net terms, we did see the sellers losing commitment around that 93.25 level, and we saw them losing control of this market once again, where the buyers didn't take control, but neither side closed with control. And combined with the doji type candle, this is suggesting that there is a possibility of a change of trend. So we are looking for a potential higher high and higher low. Now the thing here is that with the sellers being so strong in this market, any strength that we see from the buyers and change of trend may be limited by the close by previous support around the 96 level that could turn into fairly strong resistance. And we also have the Tenkan-sen trading at that level, so potentially strong resistance around 96 if this market can rally through the 94.63 level. 94.63 will be crucial, as will the 95 level, because we have seen the market test to that level for the past 2 consecutive trading days and be rejected from there. So it is an important level, and if we see early strongly bullish activity up above there, we could see the market testing to the 96 area. In terms of the Fibonacci Extension, and we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here we see the market interacting with the 61.8% level. We close through the 50% level in a bearish manner. We are seeing the market rejected from the 61.8% level. Our next target here would be the 78.6% level around 92.43 if the trend does continue. But with the indecision and the sellers losing some commitment and failing to control this market for the past 2 candles, it does suggest a possibility of a change of trend to the upside. The Fibonacci retracement technique is giving us quite a different outlook for this market. Here we've seen strongly bullish activity down through the 100% level. For the previous day's trading, it suggested a very real possibility of a change of trend with a doji candle and being rejected from the 161.8% level. We've now closed down below there with some downside momentum, and this doesn't give us any clue of a possibility of a change of trend to the upside. It suggests that this market could trade down to the 261.8% level at 91.31. In terms of Ichimoku, obviously a bearish market in all 3 timeframes. The market's trading down below the cloud, so we're bearish in the long-term time frame. In the medium-term time frame, we're bearish by trading below the Kijun-sen, the pink line, and below the Tenkan-sen, the green line. And the Chikou span here is highlighting the very strong downside momentum in this market and supporting the bearishness that we're seeing in all 3 timeframes. The problem here for this market is that it is looking overextended, and we test that by the distance that we're trading away from the Ichimoku indicators, and we are trading a long way away from the cloud. So it suggests that this market is really overdue for something of a retracement in the second term time frame, so that wouldn't surprise. But as I've already mentioned, if we do see this market trade up through the 94.63 area and the 95 level, we could quickly see the market testing to 96. We're expecting to see some solid resistance around that area and to see the sellers come back in. But if the trend does continue down, we have strong support down below 92.67 down to 92, and then down to the 90.5 level.